Hey folks, so I'm making another video because I have something else to talk about. So in this video, I'm just going to talk about NVIDIA and the shelf offering that everybody is talking about. So literally, if you go on FinTwit, everybody is talking about this NVIDIA $10 billion shelf offering. So let's just get right into it. So if we're just getting right into it, right here, Reuters is reporting that, basically they filed this mixed shelf offering, and they said that this is going to include common stock, preferred stock, warrants, debt securities, and purchase contracts. So you might be thinking, what are purchase contracts? So purchase contracts are essentially just saying, hey, you know what? You, as an investor, can purchase shares of NVIDIA at this discounted price at X date in the future. So that's essentially what a purchase contract is. And this is just to get more investor interest. So let's just go ahead and talk about their financials. So I'm just looking at NVIDIA's 10K report. Now the first thing I want to look at is obviously going to be the income statement. So we're going to jump over to page 54. And let's just take a look at the full year. So this is a 10K. So this is representing the full year. And these numbers are in millions except earnings per share. So first thing I want to note is revenue. We have a full year revenue of about $27 billion. Now look at 2022. This amount is virtually the same. So look at that. That's virtually the same. There's very, very little revenue growth here. But look at 2021 going into 2022. That was massive, massive revenue growth. So here we're starting to see revenue growth slow down a little bit. So that's a little bit concerning. Now here's another concerning thing, cost of revenue. We have a very similar revenue amount, yet this cost of revenue is about $2.2 billion more. So that's a little bit concerning right there. Now, what about total operating expenses? So we have R&D, we have sales in general, acquisition, termination cost. So yeah, that did happen. They terminated an acquisition and that cost them about $1.35 billion. So, this isn't something that happens all the time. This is probably a one-off thing. So let's just say that their total operating expenses was something along the lines of like 9.7 billion-ish. But anyways, that's still about 2.5 billion higher. So, obviously they have more operating expenses. They had higher cost of revenue. So right there, that's not looking too good. So if we're just looking at income from operations, they made about the same revenue here, yet their income from operations is about $6 billion lower. So yeah, that's not a good thing. They have interest income, interest expense. They basically cancel each other out. So do note right here that they did have more interest expense than interest income coming in. So this is helping them out just a little bit, that they do have a lot more interest income. Now, look at this bottom diluted EPS number. So $1.74 versus $3.85. Now, in the after hours, NVIDIA is down about $4 or so, but it's still very, very high. It's at about $228. So if they have a diluted EPS of $1.74, I mean, let's just do the frickin' math. This thing's overpriced. So 228 divided by $1.74. Yeah, if you're buying this right now, you're paying like 131 times earnings. So that's a price to earnings ratio of 131. That's not good. That's not good. Not good at all. Now, let's go ahead and take a look at their diluted shares. So if we're looking right here from 2022 to 2023, this went down a little bit. But, let's go over to the balance sheet. Let's just think about this. Like, why are they doing this shelf offering? Do they really need to do it? Are they tight for cash? So let's just go ahead and look at this. So cash and cash equivalents, that's about $3.4 billion. Marketable securities, that's about $9.9 billion. Accounts receivable, that's about $3.8 billion. So if we sum this up, That's about 10 billion, 4 billion, 14, 15, 16, 17. That's about $17 billion or so in very liquid positions. Now you have inventory of about 5.15 billion, prepaid expenses of about 791 million. So if we're looking at total current assets, that's about $23 billion, 17 billion, which is very liquid. But compare that to 2022. I mean, this number has fallen down about 5.8 billion or so. Now, let's go ahead and look at total assets. So total assets here is about 41.18 billion and 44.187 billion from the prior year. So, it has fallen. Let's go ahead and look at goodwill. So goodwill and intangible assets make up about 6 billion of this. Now, if we're looking at total current liabilities, this amount is about 6.56 billion. So it's gone up. If you look at in the last year, it was about 4.3 billion. So if we're just looking at the current asset to current liabilities, this is doing pretty well. I mean, they're not really strapped for cash by any means. They have a current asset to current liability ratio of about 1 to 4. So 1 being liabilities and 4 being current assets. So they're sitting pretty well, I would say. Now let's go ahead and look at equity. So if we're looking at total shareholders' equity, equity is essentially just the total assets minus the total liabilities. So if we're looking at this amount, it's about 22 billion. But pay attention to the year prior. The year prior, this was about $26.6 billion. So, NVIDIA, it's skyrocketing. It's doing all of this crazy stuff. It's overpriced as hell, and their equity is lower this year than the last. So, I mean, right now, it's looking like NVIDIA is going through a tough time, in my opinion. Now, let's go ahead and look at their long-term debt. So I'm going to go over to page 78. So this is one of the reasons why I think they might be doing this shelf offering. So they have this 3% note that's due in 2023. So the expected remaining term is 0.4 years. So let's just go ahead and do the math on that. 0.4 years. So that's 0.4 times 12 months. So what is that? That's about 5 months. So in about 5 months, they're going to have this 2023 note that's due. It's about 1.25 billion. So, maybe they're just trying to roll one of these notes out. So keep in mind that they said up to $10 billion. But this note is really only going to cost them about $1.25 billion if they do want to roll this out. So, if we're just looking at the next note that's due, this is due in 2024, so it's coming up pretty soon too. So if we just add these two up, that's about $2.5 billion. So let's just talk about that offering. They're thinking about $10 billion. Now, would it make sense for them to do mostly debt in this offering? I don't think so, because you have to think about what this effective interest rate is going to be. It's going to be pretty high. It's probably going to be over 4%. Definitely over 4%. So, if it's going to be over 4%, does it make sense for them to take on all this debt when they have a pretty flush cash position already? Really, all they need is just 1.25 billion to cover this amount if they do feel a little bit strapped on cash, if they have to pay the maturity here. So this kind of leads me to believe, hey, maybe this might be a mostly equity offering. So this could be a little bit concerning, you guys, because think about it. If they just issue a note here and there, and maybe they just issue one note or two notes just to cover these two maturities right here, that'll be about 2.5 billion. So what's the rest of that? The rest of that is probably going to be equity, or it's going to be one of those purchase options or whatever. So let me go ahead and look at one more thing. So I'm going to look at page 34. So page 34 is pretty interesting because it tells you how much shares that they repurchased and what the average price per share that they paid was. So here, when NVIDIA did buybacks, this was through October 31st and November 27th of 2022. They purchased about 7 million shares. Now, the average price that they paid was about $148. So, this is kind of telling you, okay, well, this is where NVIDIA thought that their price was very fair. So they thought, hey, our stock price is a fair price at $148. Now, if they're doing a shelf offering here at $228, maybe they're thinking, hey, I think our stock price is expensive. Maybe they're pulling an Elon Musk. So that's pretty much my assumption here, that a lot of the shelf offering will be in equity. So watch out, you guys, and I hope you guys enjoyed this video.